Nightly Business Report is made possible in part by the Jefferson State Bank and the Joseph and Bessie Feinberg Foundation.
It's another roller coaster of a day for the Dow Jones Industrial Average. Down 50, up 40, but it closes up just over 1. Yes, 1 point. Good evening. I'm Paul Kangas in Miami.
And I'm Kathy Seifert in New York. A court ruling in Florida could cause big problems for big tobacco. And President Clinton fills out the roster for his economic team during his second term in office.
Nightly Business Report is brought to you by Digital, engineering network systems that help you anticipate the future. So no matter which way it goes, you can't go wrong. Digital, whatever it takes. Franklin Templeton, a $169 billion global alliance. Franklin Templeton, and now Mutual Series. Investment products distributed by investment professionals. A.G. Edwards, dedicated investment professionals serving nearly 2 million individual investors and businesses nationwide. A.G. Edwards, trusted advice, exceptional service. And is produced in association with Reuters, which provides real-time and historical market data, news, and analytics over Quotron Advantage AE.
Stocks seesawed between positive and negative territory again today. But when the dust settled and the market closed, the Dow Jones Industrial Average had inched up 1 point. Today's volatile trading session mirrored a choppy week for stocks. Suzanne Pratt has more.
It was a wacky week on Wall Street. Ever since Fed Chairman Alan Greenspan queried financial markets last Thursday about their irrational exuberance, stocks have been in a tizzy. Many analysts blame bonds, which sold off sharply this week. Others say the recent sell-off in stocks is a natural correction after November's big run-up.
I think what you're seeing on top of that is year-end jitters. I've heard it in private. I've seen it quoted in public. I think every portfolio manager in the United States wants to put the market to bed for the night. It's almost bonus time. The year's almost over.
This week may have felt bloodier than it actually was. Overall, the Dow Jones Industrial Average lost only 77 points, just slightly more than 1%. But that follows a loss of nearly 140 points the week before. And this week, large cap stocks, as measured by the Dow and S&P 500, were hit the hardest, while small caps, despite some volatility, weathered the storm. The Nasdaq and Russell 2000 were basically unchanged. In terms of sectors, technology and financial stocks, which did extremely well in November, were among the biggest losers, while consumer stocks like food and tobacco companies were among the biggest winners.
It's sort of that flight to safety mentality, especially when there's a lot of, up 100, down 200 days, or down 150, up 50 days. So I think you saw that. You're basically a consumer non-durable companies did well overall for the week.
Investors should expect these crazy days to continue, at least for a few more weeks. As of the close of trading today, the Dow is still up about 20% for the year. And experts say many investors, both professional and individual, may still be looking to capture some of that gain. Suzanne Pratt, Nightly Business Report, New York.
Stocks on Wall Street opened sharply lower in an extension of yesterday's tumble, which sent the Dow Industrial Average down almost 99 points. Now, due to some technical problems, we do not have our usual Dow board today. In any case, the early sell-off was made worse by lower bond prices. So in the first 15 minutes of trading, the Dow plunged as much as 52 points all the way down to the 6,252 level. Market breadth was 2-to-1 negative. A quick recovery in the bond market helped blue-chip stocks rebound. At 11:30 a.m., the industrial average snapped back with a 33-point gain. The comeback in blue chips was hampered during mid-session by the failure of the broader market to join the rally. But continued strength in bond prices eventually helped the Dow Jones Industrial Average post a closing gain of 1.16, putting it at 6,304.87. The Dow rose in 3 sessions this week. It fell in 2, and it had an overall loss of 77.07 points. That's down 1.2%. Trading volume today down 458.8 million shares, probably due to computer systems worldwide, a little bit below yesterday. I think that hampered a lot of trading. Down volume exceeded up volume by some 28 million shares. The Dow Transport's down nearly 2.5 points. Utility index had a little rebound, up 1 1/3 points, and the closing tick just slightly bearish at minus 133. Standard & Poor's 500 fell 0.69, a little over a half-point drop in the S&P 100. Mid-cap 400 down just over 1.5 points, and the Commodity Research Bureau Spot Index was up just over 2 points. The New York Stock Exchange Composite fell almost 1/4 point. Value line down almost 1 1/4 points. The Russell 2000 fell 2.20, and the Wilshire 5000 dropping about 18 7/8 points. Bond prices were narrowly mixed early today until a nice rally developed after the 10 a.m. report showing a 0.5% increase in October business inventories, and that came along with a decline in the University of Michigan's Consumer Confidence Index. Both reports suggested a weaker economic outlook. Another positive factor was good strength in the U.S. dollar. This combination boosted tax-free and corporate issues to closing gains of 3/8 to a half point, while the Treasury market rose across the board. 5-year notes rose 8/32. 10-year notes up 14/32. The bellwether 30-year bond rose 20/32, bringing the yield down to 6.58%, and the Lehman Brothers Long Treasury Bond Index gained 9 1/3 points. I'll be back shortly to show you where the action was on Wall Street today. Cassie?
President Clinton introduced more of his second-term cabinet nominees to the nation this afternoon. Treasury Secretary Robert Rubin will remain the captain of the economic team. The president's choices for Commerce Secretary, Trade Representative, and several White House posts promise little change in economic policy. Dennis Moore reports.
Introducing his new economic team after a week like this in the markets, Bill Clinton had to be just waiting for the question.
Mr. President, do you share Alan Greenspan's view that Wall Street is currently in the grips of irrational exuberance?
Well, I don't comment on the Fed's decisions, and I don't comment on the market's movements, so I shouldn't talk about the Fed chairman's comments about the market's movement.
But I am pleased, Clinton said, that not only wealthy people, but a lot of middle-class people, too, have made a lot of money in this market.
I'm proud of the vibrant markets we have. They will change. They go up and down. They always do. My job is to keep the underlying fundamentals sound.
And referring back, as Greenspan did, to the crash of '87, Clinton said a market slide now wouldn't necessarily damage the economy if the fundamentals are sound. The president's new National Economic Council chairman said he was determined to maintain a legacy of sound, coordinated policy fundamentals.
Too often in the past, economic policy making has failed because turf battles overcame hard-headed analysis, because policymakers failed to appreciate the unintended consequences of their actions or the full force of the market.
The president named NEC Deputy Dan Tarullo to a new post as his international economic advisor, and he nominated acting U.S. Trade Representative Charlene Barshevsky, now in Singapore for the World Trade Organization meetings, to the permanent post. Chicago lawyer and Democratic activist William Daley passed over for a cabinet job last time, got the nomination for Commerce Secretary today.
My commitment to you, Mr. President, and to our fellow Americans is to work day and night in partnership with American businesses.
President Clinton still has an economic team vacancy to fill at the Labor Department, but he still hopes to have all of his second-term cabinet confirmed by Inauguration Day. Dennis Moore, Nightly Business Report, Washington.
Wall Street seemed pretty much unconcerned today about management problems at the Disney company. After the market closed yesterday, it confirmed that President Michael Ovitz was leaving. But Disney shares closed the session up 1/8 at 70 3/8 today. Reuters correspondent Kevin Smith reports.
At one of their last public appearances together, Disney Chairman Michael Eisner and President Michael Ovitz seemed to be going their separate ways. In fact, their divorce was imminent. But the news hasn't rattled investors.
Disney may be better without having this strife among the chief executives.
By all accounts, former talent agent Ovitz ruffled feathers among department heads and clashed with Eisner's desire to control the agenda, displaying an imperious style and lack of executive experience.
The business of running a talent agency is very different from the interests of running a vertically integrated studio, where your main priority has to be the interest of capital.
Analysts say investors shrugged off the news because Disney's core businesses, including movies, merchandising, and theme parks, are firing on all cylinders.
This is a blue-chip company that is doing very well in virtually all of its operations. There's a lot of autonomy. Who is the number 2 or the number 3 man there is not at this point a major issue.
There are some concerns about the seemingly endless exodus of top Disney executives, among them former studio head Jeffrey Katzenberg, who went on to start up DreamWorks, and Stephen Bollenbach, who left to head up Hilton Hotels. And the $90 million severance package offered Ovitz is raising some eyebrows, though some see a justification.
If you kept Ovitz and it wasn't working and you didn't want to take a hit on the severance package, you're losing opportunities elsewhere.
Disney says it won't replace Ovitz anytime soon. Meanwhile, Sony denies reports that it plans to recruit Ovitz. Experts say the Ovitz departure would have had more impact if Disney were not performing well or if Eisner showed any signs of slowing down. But with both Disney and Eisner in apparent good health, investors seem to be betting that this mouse will continue to roar. Kevin Smith of Reuters for Nightly Business Report, Burbank, California.
On Nightly Business Report, our Friday Market Monitor guest, Larry Wachtel, stock market analyst with Prudential Securities. A Florida judge says the state may accuse the tobacco industry of racketeering as part of its case to recoup hundreds of millions of dollars spent on 6 smokers. The ruling is critical because a conviction would allow Florida to collect triple damages from tobacco companies. One of the defendants, Philip Morris, says, Paul, that the facts of the case do not support racketeering claims.
Philip Morris was on the big board's active list and down. We'll see it in just a moment. Dow Jones Industrial Average managed to come back from a 52-point loss to close up a little over a point today, but for the week overall it fell 77 points. The broader market a little negative, about 14 to 10 on the negative side. 10 more new yearly highs and new lows, however. Omega topped the active list on 6.4 million shares. It was down 2 1/8 yesterday on a J.P. Morgan cut in fourth quarter earnings estimates from 19 to 17 cents. I think we saw a continuation of that selling today. Micron Technology fell 7/8, but PepsiCo moved up 1/4. AT&T rising 1/2. No change in Coca-Cola, 5th in volume. IBM up 1 1/4, traded as high as 154 7/8. Wall Street Journal noted that some high-level executives have been changed to make Big Blue more globally oriented. Prudential Securities, incidentally, came out with a buy rating on Big Blue again today. GE, no change. Chase Manhattan down 1 3/8. And there you see it, Philip Morris down 2 1/4 points on that development from the Florida judge. Merck & Company rebounding from a 3-point loss yesterday with a 1-point gain. AMR, parent of American Airlines, down 1 3/8, lending to that 2.5-point drop in the Dow Transport Index. Colgate-Palmolive up 2 1/8. A lot of big companies with international sales did well today. Federal Express up 1 1/2. As we reported after the market closed yesterday, Federal Express second quarter earnings much higher than the street expected, 90 cents. The street was only looking for 76 cents. First Star Corporation down 1 3/8. It's a financial services company, and Everett Securities downgraded it from outperform to just a market performer over the near term. Kimberly-Clark, one of those international sales companies, doing well, up 1 7/8. And Minnesota Mining, the best gainer point-wise in the Dow Industrial Average, rising 1 1/4. Oryx Energy, the star of the day on a percentage basis, rose 1 5/8. On Wednesday, the company predicted fourth quarter operating earnings will be 5 times better than last year's level. AccuStaff moved up 1 1/8. The company has acquired HJM Consulting in a tax-free merger, which it says should add to 1997 earnings. Quaker Oats rose 2 points. Today's Wall Street Journal says the company is seeking to sell its Gatorade and Snapple units, and analysts feel the 2 units could fetch up to $3 to $4 billion. Galoob Toys tumbling 2 3/4 points. Hambrecht & Quist ties the weakness to a rumor that the company won't get a license to make Star Wars toys. Nevertheless, Hambrecht & Quist kept a strong buy recommendation on the stock. Group AB, this is a French television production and distribution company, went public on the big board yesterday at 21. It only moved to 21 1/4 and closed unchanged, and I think some disappointed buyers of that IPO sold out today. Quanex Corporation down 1 7/8. Fourth quarter earnings out yesterday were higher, 84 cents versus 72 last year, but today the Rauscher Pierce brokerage downgraded the stock a notch. The NASDAQ index was down 13.42 today. For the week overall, however, it fell only 2.76 points. 553.7 million shares traded, down a bit from yesterday. 16 stocks up for every 23 lower. Intel topped the active list, down 4.5, little profit taking there. Oracle Corp down 3 1/4. As we reported after the close yesterday, Oracle had second quarter earnings of 27 cents. That was 1 cent below street estimates. And I guess there's no room for disappointment these days. Microsoft down a full point. 3Com fell 3/4. The Cisco system dropped 1 point. Dell Computers off an eighth. Ascend Communications fell 3.5. 2.5 point drop in U.S. robotics. Altera dropped 1 point. And Cascade Communications down 2 3/8. Not a gainer in the 10 most actives on NASDAQ. Interlink Computer Sciences with a beautiful gainer up nearly 4 points. Cisco Systems had purchased a 9% stake in the company as part of a strategic alliance to jointly develop and market software. Morrow Snowboard slid down 1 3/4 points. Company says fourth quarter sales will be below expectations, be about the same as last year. Dane Bosworth Brokerage downgraded the stock from buy to hold. And Regis Corporation, which operates almost 2,000 beauty salons in the United States and Canada, had a bad hair day, losing 4 1/4 points after the company said second quarter earnings will be below street estimates of 30 cents. Company's looking at maybe 25 cents a share. The American Exchange Index down 3.05 today, but for the week it fell 9.64 points. Trading volume down 3 1/4 million shares from yesterday. 2 stocks up for every 3 lower. Standard & Poor's depository receipts topped the active list up 3/16, even though the Standard & Poor's 500 was down 11.5 points today. High-Shear Technology rose 7/8, one of the better percentage gainers. The company announced a 157% increase in second quarter orders, I should say, over last year. 1.5 times last year's levels. Thermo Cardio Systems down 1 7/8. The Smith Barney, Oppenheimer, and NatWest brokerages all cut earnings estimates on Thermo Cardio Systems. That's our Wall Street wrap-up. Cassie.
It looks like another municipal bankruptcy is in the works. This time, Middlesex County, Massachusetts is in default on at least $3 billion worth of notes due to the Boston Company. The county is also expected to notify Fleet Financial Group on Monday that it's defaulting on another $1.5 million of debt. Middlesex County is located just west of Boston, where Harvard University is located.
Monday, a look at the growing business of teleservicing and one of the leaders in the industry.
United Airlines says it has reached an agreement with its machinists union over wages. The deal calls for 3% increases the first 2 years and 2% wage hikes for 2 years beyond that. Machinists also become eligible for lump sum profit-sharing payments beginning in 1998. The plan must still be ratified by the union members. UAL closed down 2 points at 61.
The longest libel trial in British history wrapped up today, with the judge saying he'll issue a verdict eventually. In the so-called McLibel case, McDonald's sued 2 activists who printed pamphlets claiming that the company promotes an unhealthy diet and damages the environment. McDonald's says the claims are untrue. The case has been in the British courts nearly 2.5 years. McDonald's stock today gained 3/8 to 46.
The NASDAQ is joining other stock exchanges in looking for new listings in Germany. 5,300 companies currently list on the NASDAQ, and the exchange's vice president was in Frankfurt today trying to drum up new business. But the task won't be easy. Charles Balfour admits German firms find it difficult to adhere to U.S. accounting and disclosure standards.
My guest market monitor this week is Larry Wachtel, Senior Vice President and Market Analyst for Prudential Securities. He's in our New York studios. And welcome back to Nightly Business Report, Larry.
Hi, Paul.
This market's volatility is a lot of people worried, no question about it, this week particularly. What does it mean to you? Is this a market top? Is it a correction? What is it?
Let me put it in perspective. We had that springtime speculative surge that culminated in that selling climax in July. When that ended, the word on the street was buy big, buy beautiful, buy big blue chip stocks. And we began a Dow S&P type of move. And that entailed 1,400 points since the mid part of July and 500 points during November. During that period, the broad market was not participating. We had normally about 900 to 1,000 declines each day. So we had a Dow extravaganza. To the degree that the Dow has overstated, the Dow is correcting. All stocks do not move up with the Dow. All stocks will not move down if the Dow corrects.
All right, now, do you expect a sea change where the Dow stocks will take a backseat to the secondary issues, to the NASDAQ market?
Exactly. Well, more to the red chips or the laggards in the blue chips, and the Russell 2000, the small cap stocks. So the Dow might take a breather, but the broader market will do okay.
How big a breather do you see the Dow taking?
Well, if you go through a 1/3 retracement, maybe I'll make a case for 6,200, another 100 points down. That's about the worst that I could see. When you're dealing with the Dow, it's very volatile, so it's hard to pin things down. But I would think a 1/3 back to 6,200 would be the bottom.
All right. Well, last week we got this whole thing started, it seems, by Federal Reserve Chief Greenspan talking about irrational exuberance in the market. How do you translate that Greenspanish into English?
You know, if he had made that remark in the spring, I would have concurred. That was a speculative surge. That was irrational. This has been a blue chip move. What he is saying, in effect, is, hey, IBM, GE, M, we don't like you moving up that way. I think that was a bit overstating the situation. And I think, of course, when the Fed makes a statement like that, it does cast a shadow over the blue chips. There's no doubt about it. But it might have simply been an exploratory question rather than a statement of policy.
Okay. Do you see any change in the monetary situation at next week's meeting, Tuesday?
Nothing at all. The economy is cool.
All right.
They're not going to make any move based on the stock market.
Well, judging by what you told us at the top of the interview, you apparently like some smaller secondary stocks. Could you name a few that you would buy here?
Well, three semiconductor stocks I like a lot are National Semiconductor, NSM, Advanced Micro, AMD, and LSI Logic, LSI. They all sell in the high 20, low 30 area. We have a $40 target. Those are our favorite in the chip stocks, a group we like very much. I think there's a pause going on in the oil service group, a group that we also favor. And a Reading and Bates at 29 with a target of 45, and maybe a big cap stock like Schlumberger. And then three laggard blue chips that I favor is Corning Glass, the big fiber optic company, Philips Electronics, which is the largest semiconductor company in Europe, and Xerox, which missed their quarter but has lagged behind. I think that's a nice complement of stocks that will do well over the next 6 months.
So you still see some fertile ground to choose from here?
Stock picking is the key, not the Dow. Let's pick stocks.
How about bonds? Do you have any interest there at all?
We have increased our allocation to bonds by 5%. We think the economy is basically flattish, and bonds can come back a touch.
All right. Larry, very interesting, and we'll take a look over the next several months at those picks of yours, and thanks very much for being with us.
Thank you, Paul.
My guest market monitor, Larry Wachtel of Prudential Securities.
And that's Nightly Business Report for Friday, December 13th. We want to remind you this is the time of year your public television station seeks viewer support.
Support that makes programs like Nightly Business Report possible.
Thank you for joining us. I'm Cassie Seifert in New York. Have a great weekend, Paul.
And the same to you, Cassie.